Well, arguably the news of the night and what could be the news in the day ahead is core CPI hitting a 31-year high last month. Markets are now wary of a potential 50 basis point hike from the Bank of England when it meets tonight. So to chat through the dynamic and the trading implications, Nick Twidale from FP Markets joins me live at the desk. Nick, great to see you there.
Thanks, mate.
We're going to talk a few issues here, but obviously couldn't resist talking at least first about that CPI measure in the UK, the Bank of England tonight. Again, the Economist call, I think, is for 25 basis points. But, you know, we chatted about a month ago or thereabouts, and you were just sort of saying that, well, people are kind of absorbing these kind of cost of living rises pretty well and just keep spending. What do you think what's going on here in the UK? Because it looks very much like runaway inflation.
It does feel like runaway inflation, and on a personal note, this is probably not the best time to be going on a trip back there, which I am.
Oh, right, okay.
But I looked through the whole raft of numbers last night, and even when you look at the retail pricing, that's over 11%. Some of the numbers are a bit scary, and I think the bank's looking at that, and they're going to have to raise rates. And I think there is a real danger that we do see 50 basis points tonight. And if we do see that, then the market's going to react sort of fairly violently, I would think.
I would have thought so, yeah, because I was looking at the futures curve, or what I could best glean from it, from gilts as well as risk-free rates there. And, you know, it's not priced in 50, but there's a chance. And even still, I suppose it does seem that, market's pricing in a rate above 5 at some point. So that's huge.
Yeah, I think it's huge, and we can look at some of the other central banks as well. Like, arguably, we had a surprise from the RBA. Arguably, we had a surprise from the Bank of Canada as well recently. So I don't think it's beyond the realms that traders should be more prepared for that to come across. And then maybe the risk side is actually if we do see a slightly more dovish, if you could get that from the Bank of England. But I think, you know, really the risk is going to be if they go 50 and where they go after that as well. So it's an interesting play. It's going to be very interesting to see what they say afterwards as well.
Yeah, exactly. And I suppose too, I mean, Powell really reaffirmed that last night as well. We'll get to a few charts in obviously a second, but I mean, he pulled himself back at the press conference last week from calling it a skip. But I mean, it's not a bad way to phrase it, because last night, I mean, he did say that, you know, we could potentially, or they think that 50 basis points is still to come from them. And
I think that's valued as well. I mean, I think the market's kind of getting ahead of itself, especially in the US, on turning a bit more dovish from the Fed. And it's like, okay, once this is done, we can move higher. But we sort of haven't had that cathartic move, especially in stock markets, to reaffirm a little bit of weakness in the economy. So they're still striving higher. So you've got that in the US. You've kind of got a similar position in the UK. So there's a lot of confusion in the market. You look at what happened with the Fed yesterday. I was trying to write a report this morning. It's like stocks got smashed because the Fed were hawkish, and then the dollar got smashed because the Fed weren't hawkish enough. So I think we're hitting a bit of an interesting time in global financial markets, and certainly the US, where correlations are falling apart, and something's gonna give at some point. And I'm sort of leaning on that stock market side of things and risk, and we have to have that cathartic sort of move back down. But I've been calling that for a while, and I've been wrong. So it's a bit difficult.
It is definitely difficult. Okay, well, that's a good segue into the charts now. We'll start with the Aussie, because it's really run up probably simultaneously on the China news as well as the RBA. It's new hawkish plumage perhaps, but the hourly Aussie. What are you looking at here?
I think we're still trading mid-range. It's been a nice move back up from those lows, sort of that 65 level, and it's capped out nice. You've got to think sort of fair value, given what's going on at the moment, is probably going to be around about these levels. From a purely technical point of view, we've got that moving average there, and it's banged up against it a couple of times. So you probably see a few guys looking to sell some Aussie, especially some of the local guys here. And then moving up, you've really got resistance coming in sort of much higher around there. But for the day, I think the Aussie's going to be moving on the back of those dollar machinations rather than anything else. So relatively quiet day, I would expect, range bound during the Asian session, and then things will start to pick up when we see things like the Bank of England coming through, and then obviously we've got more from the US tonight as well.
Yeah, and this is the daily chart here. So let's talk that, because I mean, structurally you could probably still argue perhaps that the Aussie dollar's in a downtrend, but well, I don't know, maybe some signs of momentum could be reversing. Yeah,
longer term, I think we're still kind of in that downtrend, and it did come off that longer term sort of trend line resistance, which came in around about 69 cents. As you're saying, I think also for the Aussie we have to look at that China situation, and China's sort of, we've seen a little bit of resurgence there. It wasn't brilliant news from the PBOC, but Aussie I think is trading at quite a fair value at the moment. But I'm probably leaning towards being a bit of a fade the rallies guy still, mainly because I think that job's not really been done in the US yet. Once that gets done, then I think the Aussie is one of those currencies that you do look to get on the back of. But timing is going to be all as usual. Yeah,
it's hard to see, say, a US recession or a significant US slowdown without seeing the Aussie come off a little bit by proxy, I guess. But all right, let's get to the cable now, because we will be watching this closely for the next 24 hours. And actually, no, sorry, my apologies. This is the euro. So that's my mistake there. But let's talk the euro, of course, an incredibly important component of the US dollar index. And I mean, I guess for much of June, the same story. It's been sort of grinding higher.
Yeah, it has, and I think that's been on the back of this sort of like this dollar bearishness that's coming through, and it's coming through on the back of a perceived. I think the market, as I said, is getting ahead of itself. It's a perceived dollar weakness on the back of the Fed going to stop and stop soon, whereas you've got the Fed chair coming out going, well, we've got two at least. But the market's like, yeah, well, we're going to go with one. And currency markets have sort of been getting ahead of themselves. And like last night was a prime example. Like that move back up from sort of the low 109s up to nearly 110. It feels like the market wants to have a crack at that 110 level. But once again, I think we have to see what happens tonight in the US in the European session.
Yeah, indeed. Okay, let's see what we've got the next chart, because again, that was a little bit of a slip up there on my behalf. We'll go to the Euro Daily now, just directors in my ear, so we'll skip ahead to that. And well, there's, I would imagine that's the 200.
Back to the Aussie, I think.
Oh, it's back to the Aussie, is it? Oh, there we go.
Yeah.
Oh, geez. Not having a good one here.
That's probably my fault for sending them through.
No, just not at all. Let's get to the. Oh, there we go. There's the pounds. So let's talk through that now, because that is the daily chart, if I'm not mistaken. It is. Actually, it's a pretty cool, clear trendline support there, and we're coming up to perhaps a more longer term resistance level too.
Yeah, so I think what we get from the Bank of England tonight could be key. And you look at these longer term charts, and that's not a bad longer term sort of resistance level. But that downside, that support level's played really, really well over the last few weeks and really sort of most of the quarter. So I think what we get tonight, if we do get that surprise 50, for instance, then I think we do see a break of that top size resistance sooner rather than later. They go in 25, we might see it drop back into the range. So it's an interesting setup that we've got for cable at the moment. And we've not got the charts, but I think you've got to look at sterling on the crosses as well. It's been appreciating really well.